Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 19th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see here that the ES is currently trading within the narrow 6-day range that has continued to develop here. If you look at a 10-day range basis, it's also narrow. I have a 10-day base right there. It's at 47% of average range. You can see it's below the bottom red dot. That tells you that all of this back here, all the way back, is really narrow. Not just on a 5-day basis, but also a 10-day basis. And that suggests that the market has been compressing ahead of the FOMC meeting and the statement and the interest rate decision, which came out yesterday. Here's our FOMC key level for 9/18 is 3,000.5, and so that's the level right now. The last couple of times, or two of the last 3 times, it has sold off tremendously. The time in between that, which is here on 6/19, it actually took a bid at the end of the day, as it did yesterday, and then after that, it blasted off, retested, and continued. So right now, this is playing out a little bit more differently than the very last time, and instead is showing a little bit of strength on this line. Again, remember, keep in mind, we've come out of this compression here, come out of it, and the pullback here into the PIMA trigger zone is usually an opportunity to buy yet again. The only difference here this time around is that we are at major resistance, and at times any late longs up here, if they don't get paid, that becomes a bull trap that leads to quite a bit of selling pressure. And so on a 10-day range basis here, we could be looking at a move somewhere about 170 to 200 points of range here pretty soon. So if that's going to be to the downside, we come right back toward recent support. And if it's to the upside, then perhaps we have a major breakout coming. So again, are we going to see a bull trap at these highs? We will see. But anything below 29.80 starts to run the downside stops. Alright, let's take a look now. And above 30.10 has a great shot to show upside expansion, at least through recent highs. Alright, let's take a look lastly or next at the NQ. Alright, here you go. Another narrow range right now. Again, another 10-day range that's very compressed. That's looking out all the way to here. If you look back the 10 before that, it was also compressed. We're still in the pullback phase of this up move after the breakout from the August range, and that tells us that again we could have more upside ahead. We are very close to the recent highs. We didn't hit them. Kind of like we did in the ES. We still have a little bit more to get toward those highs, but very similarly, if we break through 7,800, that's going to be a failure point that can lead us right back down to recent support lows, 7,400. So keep an eye on 7,800 for any signs of failure. In the very near term, if this thing starts to break up through 79.30, 79.40, it has a good shot to see a breakout day. Alright, let's take a look now at crude oil. Now, crude oil has had a ton of headline risk, and whenever that's the case, the headline risk has only seemingly increased in crude oil over the last many months. And so with this major gap up here, that's significant. Again, failure to hold 58.50 would suggest a fill of the gap with a shot to rotate back toward recent support. If they can continue to hold 58.50, then perhaps, as we mentioned the very first day, we have a new normal between 58 and 63.5, right, where we could basically trade in this zone. So right now, it's very important to keep an eye on the previous session's high price. The previous session's high price is 59.27. That's 59.27. We're currently just above that at 59.35. It's tried a couple of times to hang up above this level. If it starts to reject that zone, we could easily see a rotation back to recent lows of the previous session. Above that 59.30, call it, and if it can continue to hold that zone, perhaps we move higher. So that's going to be the early level right there to watch for signs of rejection in crude oil. Let's take a look over here at gold now. There we go. So here, looking at gold, you can see again, we've had a major uptrend. We're right on the line at the moment. We do have kind of a rounded top that has developed with a very clear rim. It's 1490, that's support level. This could also be seen kind of as a head and shoulder pattern, with this being the neckline. But 1490 is very important. I've mentioned that before. If we fail to hold 1490, we could easily return to this blue line right here, which is the previous month's low price. It's the August 1st low. So this 1490, very, very important. All the way even down to 1460, we have a very clear LVN. So any drop into that zone could still be seen as a bounce and a continuation play. But again, if it fails to hold 1490 for an extended period of time, that could open up a return to 1400 to 1420, and maybe even a little bit lower into the 200-day 1377 and 1375 LVN. That would be the next LVN below this one. So again, very important levels here. Overall, this market is held. We also have a narrow compression, not quite super narrow on a 10-day basis, but it is narrow on a 9-day. It is also narrow on a 5-day. So it is compressing. So if we drop this down to say 5, right there, that's what we're looking at right here, 56% of average. But that's on the current session, which means this is still a developing day. And by the end of the day, we could increase that range and this can change. So it's not yet set in stone, but it does show that there is complete compression here that's happening. And that compression suggests that the next phase of expansion is coming. Kind of like it did back here, where it compressed and then finally it broke down first, then broke to the upside, and then continued. So we may see some of that action again this time around for gold, but a breakout in either way could be significant. Above 1520 to 1525 opens up new highs. Alright, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.